Good evening, fellas. Hope you have a wonderful week so far, midweek, and a lot is happening in the markets. Today we will be covering Eliott wave analysis. So as you all know, when it comes to trading, a big part of what a lot of traders do, usually both of the day, are one of the most straightforward ways.
Okay, hey Sam, I think your voice is a little bit you're not audible.
What about now?
A little bit better, but you might come closer to your mouthpiece.
Okay. It's better now.
That's better. That's better, yeah.
Okay. So I was saying, I hope everyone is having a lovely trading week. And what we'll be discussing today is basically Eliott wave theory. In this, a lot of what traders do usually tends to boil around finding patterns in the market. So there's fundamental analysis, and then there's a technical analysis, which is trying to see what patterns you can observe in the market. And there's usually very many principles to guide you on finding patterns. And one of the most popular ways is Eliott wave theory. And in this case, I think Mathew is going to introduce it, and then we're going to discuss how to go about mapping this theory on your chart so that you're able to spot exactly where you are when it comes to the relationship between the Eliott waves and the chart patterns. And then after that, you're going to see examples on the charts, and we see how you're going to utilize it to make more profits in the market. So Mathew.
Hey Sam, thanks. Good evening, traders, viewers. I think it's been quite a long time we've not had such a session. Welcome back, and let's see.
It's been a while.
Yeah, let's see about these waves. Just like Sam, you've said, traders are looking for ways of making sense of the market so that you can find an entry. And one of the ways of analyzing the market is by looking at the waves, because of course, you know, markets moves in waves, up and down. Yeah, trending upwards, trending downwards. And that's what we are looking to understand today by using of Eliott wave. So the Eliott wave theory is based on prediction of human behavior, where you have trends that can form patterns. Because of course, when you're looking at trading, it's human beings like me and you who are making decisions to buy and sell, and the decisions to buy and sell is what drives the market upward, downward. You have got people entering trades, others getting out of trades, and all that has got an effect on how the price moves. So it was developed by Ralph Nelson Eliott, named after his name. That's the Eliott, around several years ago, around 60 years ago, just to speculate the price movement of financial instruments. Could be stocks, could be currencies, and you know, most of these trading tools, they were formed based on stocks trading principles, and we still apply them because you're also looking at the changes in price. Yeah,
because there's something you've said about it being based on human behavior. And because it's trying to track human behavior, then you find that it's applicable across all markets, because at the end of the day, most markets are traded by humans. So in as much as they were designed for stock markets, then you can even apply them in other types of markets, such as forex markets.
Basically, yeah, that's true. So looking at the waves, they identified using numbers like 1, 2, 3, 4, 5. There, it's like 5 waves, okay, and then there are corrections. So anytime you have a market trending upwards or downwards, there is going to be a correction. Yeah, there's usually a correction, and that's why it's marked. They are called actually the motive wave, and then you have the correction, okay, or the impulse and the correction. So the impulse wave is usually aligned with the long-term market trend. There are like 5 minor waves in line with the major trend or the long-term trend, and then in between you have correction or the correctives or the pullbacks, and the pullbacks have got 3 minor waves, and it's a pullback from the long-term trend. So simply we're looking into the impulses of the market, and then we have a little bit of a correction, okay, and the market taking a breather, and then we have got another strong push, the impulse again, in line with the major trend or the long-term trend in the market. That's what you want to look at. So impulses and corrective waves. That is what actually constitutes the Eliott waves.
Maybe you can talk about what exactly is an impulse.
Simply, an impulse is where you have the market taking a certain direction with a very a strong momentum. That is basically how you can explain it. For example, if it's an uptrend, you will have an impulse where you have the strong trend. The trend to the upside is very strong, with some very short-term pullbacks, and then once you have the price resuming, it's just flowing strongly in that direction. I don't know whether it's simple in that way.
Yeah, I think that makes a lot of sense.
Yeah, just like the way you have impulse or an explosive move. If it's a downward trend, then once the market starts or takes its course or its flow, it's a very strong downward move. Then we have a very short correction. Then once the price resumes again, it's a very strong downward move. That one now is considered as an impulse. Yeah. Okay. Good one there for seeking out that clarification. This is an example of an uptrend wave. So like I mentioned earlier on, is you have 5 waves. So the first wave, you have it here, wave 1. Then you have wave 2 is a correction. The wave 3 is the impulse. So wave 1, wave 3, and wave 4, those are the impulses. That's why you have the market taking very strong move towards the long-term trend or the major trend of that market. Then after that, it's followed by form of a correction or a corrective wave. So, so if you look at 1, 2, 3, 4, 5, I don't know whether I can use something to highlight this one. Let me check out real quick.
Yeah, but one thing I've noticed, Matthew, is the impulses are generally stronger or greater than the corrections, meaning that they are much longer. They cover much greater distance in terms of price.
That's for sure. They cover bigger distances. So, for example, here, and by the way, it won't move in a straight line. We will find later in the presentation that there are also minor waves inside the wave 1, still minor waves inside the wave 2, minor waves inside the wave 3, wave 4, wave 5, all that way. So looking into the price moving from wave 1, 2, 3, 4, 5, then this is what is considered as the motive, sorry. That's the motive or the long-term trend. And then we have the correction in this case, right?
Yep, exactly.
This is for the uptrend. And we later come to find that how do you get the beginning of this? How do you get the beginning of this wave 1? Most of the times you realize that the market did not have a direction at that time. So it's been like quiet, no definitive move. Then within or in the fullness of time, then you realize that there is one strong move that gets out of that consolidation. That's how you identify the beginning of the first impulse. So once you get the beginning of the first impulse, then you're in to start marking your various levels or various waves for that trend. So moving on next.
An important point you've mentioned is that when you're looking at the waves, it's also important to know that there are waves inside those waves. And usually a big problem traders face is when it comes to multi-time frame analysis. So when you switch from H1 to, say, M15 timeframes, then the chart throws you off guard. So adopting this way of thinking, then you're able to sort of know where you are in the bigger picture. So if you're in a 15-minute time frame, you still know where you are when you zoom out to maybe a daily time frame or a 4-hour time frame. So it sort of gives you a map of what is happening.
Sure, like what I've marked there, right?
Yeah.
A, B, C. So in wave 1, you can have a minor, another 5-wave pattern, like 1, 2, 3, just to complete the wave 1, because you won't have the price moving in a straight line all along.
Yes.
Yeah. We will come to see these ones as degrees as we move along, but it's a nice one to highlight that one as well.
Yeah, true.
So this for an uptrend. Let's check out for a downtrend. The downtrend scenario, realize something like this, just the opposite of it. Let me clear what we have here now. So in this case, you have the down one move, the wave 1, wave 2, wave 3, wave 4, wave 5. So wave 1, wave 3, and wave 5 are the impulsive waves, or the ones which are in line with the motive or the long-term trend. Okay. And just like you've mentioned, we have other minor waves inside those waves that you have here. Like, for example, you have 1, 2, 3, 4, and this is 1, 2, 3, 4, and then you have the wave 5. And then after that, you have the corrective one taking like ABC, just 3 moves. We also look at how the ABC patterns are likely to form.
Exactly. Yeah.
Okay. So let's check out how something about the corrective waves. And in this case, I'll be using just highlighting using this is it a marker? So for the corrective waves, it's going to realize that it can either be a zigzag. A zigzag is where it is like you have the price, you've got more of the, the market structure where you have higher highs. So if the price has been moving this 1, 2, 3, 4, 5, then if it's a zigzag, then you're likely to have something like this. Okay, where you have this is A, B, C. So it's going to behave in such a way that we have the price going, making something of a market structure, that you have the next level price breaking the A part of it, something like that. If it's been a correction or a corrective move for a downward trend, then if it's been if it's not a bearish trend, then you're going to have, or a bearish wave, sorry, a bullish wave, you will have a correction that looks like this. Yeah, where you have the price beating the previous, this is the A, B, C, right? So if it's a flat wave, then you're going to have something like a consolidation, where looking at the wave 5, from the wave 5 for the zigzag, the next the B, the B, where you're having the B, right? The B wave, it's a little bit higher from the position of wave 5, the low of the wave 5. Looking at the downtrend, for instance, the uptrend, for instance, where you had 1, 2, 3, 4, 5, then you have the B is a little bit lower than where you had the wave 5. In this case, this is 1, 2, 3, 4, 5. So the B is going to be lower, right? But for the flat, if you have the wave 1, wave 2, wave 3, wave 4, wave 5, so looking at the position where you have 5, then checking on the corrective one, then you have A, then B, and C. So it's a little bit flat, such that looking at the point of wave 5, the end of wave 5, it's almost the same level with, if this is A and then you have B, it's almost the same level with B, right? That's for the flat correctives.
So when it comes to corrective waves, these are waves that mark the end of your initial 5 moves.
Exactly.
And then they come in 3 different types. The first one is the zigzag, where after the end of the 5th impulse, the second dip doesn't come close to the 5th impulse.
Yeah, it's a little bit like it's forming form of a market structure of a higher high or a lower low, depending on the type of. Yeah.
So now that marks the end of the initial market structure going down, the initial trend going down, and then now you're starting to form higher highs and higher lows. And then now for the flat is sort of a double bottom.
Some sort of, you might find that type of a setup.
Okay.
Yeah, sure. So for the triangle, then is where you're going to find out setups like a wedge, okay, or sometimes even a flag, okay. Those other types of structures that can show you reversal patterns. So if I just try to sketch, this is wave 1, this is wave 2, then we have wave 3, okay, we have wave 4, It's the pullback. Then you have the wave 5. So for the triangle, that might form something like this is the bottom or the low of the wave 5. You might have something that's forming up like more of a wedge pattern, right? It might have A, B, C, D type of a structure. That's where you can find some form of a wedge. So this is going to lead to a breakout form of a pattern in the market. Yeah, makes sense, right?
Yeah, makes sense.
If it's an uptrend, for example, if you're on an uptrend wave formation, that's 1, this is 2, then you have this is 3, then you have 4, okay, and then we have 5, right? So looking at this, the top of the wave 5, then you might have some form of the corrective wave forming some pattern that will form a wedge or some form of a breakout pattern that you can exploit. Yeah.
Okay. Yeah.
So it's always important for traders to check out for be very keen, because the problem that comes with these waves is, where do you start from? Yeah,
exactly.
If you get a good starting point, then it becomes easier to identify these other waves. And we have degrees. That's what we're going to check out next. We have degrees that traders need to use based on based on the time frame that you're using, or that wave. Is it within 100 years? Is it within centuries, or what time frame are you checking out the cycles in the market?
Exactly, because you wouldn't want to be caught off guard, or you wouldn't want to misinterpret a wave. Maybe you are in a wave 3 and you're thinking you're in wave 2 because you've misread the chart. So again,
Exactly.
it's a good case to make that you should practice more. I think, because at the end of the day, you need to be able to master your position in the bigger picture when you open a chart, or when you open a time frame.
Yeah, I think this type of analysis is very strong, because now it means you can find, if you decide to analyze a market, you can analyze for the last 5 years what are the cycles that this instrument has been following. For the traders who want to study and understand the long-term movement of a given financial instrument, study its history, because history is very important. This is a very strong tool of analysis, because you can find out for the past 10 years what has been the cycle for the last couple of years, for the last couple of months, weeks. Then you zero down to days and hours, right? It's a very strong tool that can help a trader to really have an idea of what's happening in the market. Okay, so let's look at the degrees. And it's the waves, of course, they are forming within the 5-3 structure that is there. This kind of 1, 2, 3, 4, 5 type of a structure. And this is just showing the degrees. When you're talking about degrees, it's just the waves within a wave. That is what we're calling degrees. For example, looking at this, there's 1 here, then we have 2, then we have 3, then 4, and 5. So there are different ways of labeling these waves so that become easier for us to understand. And in our next slide, we're going to look at the time frames that will help you know what type of a wave you are using to analyze, okay, the markets. Because of course, when you go to the MT4, the MT5, there is the Eliott wave tool which you can use to draw. And once you go there, of course, you find minuet, minute, minor, sub-minuet, primary cycle. So how can you effectively use them, right? You need to master these terms, and it's going to be important. For example, maybe I can share the screen for MT4. Hope you can see the MT4 and you see what we're talking about here, even before we go to the to looking at them. So for example, here, if I go to insert, let me go to a white background. Let me go to, for example, weekly. Okay, and I can a little bit zoom it out. I don't know whether this is very visible to all of us. So then if I was looking for those waves here, for instance, and I'm using this one as an example, I've not actually analyzed historically to be able to give those waves accurately. So if you go to insert, and then you go, you find it on where is it? It's on the shapes, not on the shapes. On the lines.
No, go to arrows.
Not on the arrows. I'm used to drawing them on the MT5, so I don't find them here. We will switch very fast to the MT5.
Oh yeah, it's usually on the. Doesn't okay. Let's see if MT4 has them.
Not here. Let's check them out on the MT5. MT5 for matter of saving time here. So you go to MT5, and by there we have the MT5 for the traders who want to use these high level tools. So I'm here. Let me use the template of color on white. Okay. So let's say, for instance, I want to use that wave here. So I will go to the insert, and then on the objects, that's where we'll find we have the Eliott wave.
I think after shapes, above shapes.
Yeah, the Eliott wave, exactly. So you can have the corrective or the Eliott motive wave. So in this case, let me check out for the Eliott motive wave. I consider this one as the end of this wave. We have something like a correction here. So this is 5, this is 4, this is 3, then we have 2 here and 1. Let me try to search this one, and then we can see how to find it. Just a second. So I can have an example in this case. Go to daily. Now 4 hours. This is a 3, 4, 5. Then you call this one it is A, B, C. So I might have to zoom much more. So in this case, you go to insert, and then the objects, and then the Eliott wave motive. So 5, 4, 3. This is 1. So from this point here, I will just have it from there. This is 1. Then we have 2, 3. Nope. We start with 1. So we're starting from this point here. Insert objects. Let me label where you're starting from. Starting from this level here. That's why we have some form of consolidation. So then we're starting from the top here, where we have the wave 1. So then we have wave 1 all the way here. Then we have wave 2, 3, 4, and 5. Okay, so in this case, what I wanted to show is, because if you just draw here, you find it. What I wanted to draw is, let me just use lines. This is wave 1. We have here wave 2 all the way here. Then, of course, just around this level. Then we have wave 3. Okay. Then you have wave 4, that correction. Then wave 5, right? So looking at this one, I'm just explaining. This is not as accurate. I just wanted to explain these degrees, okay? And the best way to explain the degrees is by using the examples on the MT4. So in this case, if you have wave 1, 2, 3, 4, 5, you see, if you right click here, because these labels might not be the best ones to use depending on the time frame which you're analyzing on. This is on hourly. And if you check out on the presentation here, you realize that if you're looking at hours, then of course you'll be using the minuet, right? You'll be using the minuet labels. So if you go to the presentation here, we are analyzing on 4 hours, and from this time, from this one here, you can see that if you right click on it, on the wave, go to the properties, you will have this part where you can select on the parameters. Sorry, I've just selected on that is a trend line. So I have to click on this two, right click on the two, go to the properties of the Eliott wave, and then when you go to the parameters, you have to select the degree. So the degree is the waves, is the wave on another wave. So if you just click that drop-down menu, you realize we have the grand supercycle, all of these minuet, right? Subminuet. So in this case, if we go to minuet, right? The minuet is for days. And for example, looking at this 4 hour chart, this one is covering several days. So you might want to start with minuet or even minor if it's covering up to weeks, right? So this one, let's go to minuet because it's more of days, several days. So if you select it, then it's going to give different values here. For example, this is Romans. You see the Roman, the labeling is on Romans, right?
Yeah.
It's on Romans. So the degrees is where you have different waves or smaller waves within bigger waves. And this is where now we're looking at for instance, the grand supercycle for centuries, supercycle for decades, cycle for years, primary, it's months to a year, where you're analyzing the chart for month to a year, intermediate, weeks to months, minor for weeks, minutes, minute or minute, days, then minuet, hours.
I think one example you can look at is in the stock markets, the US 500, when you zoom out to the weekly or even the daily.
The weekly is 500. You have it? You want to share that, or you want me to
just share it from your end because you already have the MT5 loaded?
Okay, sure. So this is what traders need to be really noteful about the waves that you're drawing.
Exactly, yeah.
Depending with the time frame or the time frame which you're analyzing the markets on. And I started by mentioning that this is a very strong tool, because if you can have the rough idea or the picture of the waves, or the movement of the market for the last like 10 years, and then you're coming to months, coming to several years, then to months, then to weeks, then to hours, you're going to have a clear-cut picture of where are we likely to have pivot levels, okay?
And turning points.
And turning points, because you can combine this one with Fibonacci retracements, the Fibonacci tool, and it can really be a game changer in trading.
Because the most important thing is to not try and get lost or draw the wrong way, the wrong time, because at the end of the day you need to know where you are in the bigger picture, if at all it's supposed to be effective.
Sure. So the trader is asking, Forest Kenya, thank you for being here, and asking whether it can help you see double top and double bottoms. Why not? If, for example, you check out on especially on wave 5, because I think now you're looking for a reversal. On wave 5 is where you're likely to spot such type of patterns, and that's where we're looking at the various corrective, actually on wave 3, end of wave 3, right, and the end of wave 5, right, and end of wave 1, you can find those type of patterns. But again, you need to have a clear idea of where the major trend or the motive is, right? Or the long-term trend is, so that you can utilize them. For instance, if I can just use to just highlight in this case, you might get some form of a double top here, right? Double top type of a pattern, 1 top, 2 tops, 3 tops. And if it's something you wanted to trade, then you can catch a small trade, a small short position here, right? Something like that.
Another very interesting bit, Matthew, is for the corrective waves, you can also sort of identify where that corrective wave is going to end. So that's sort of a reversal back into the main wave.
Yeah, sure. So what the trader was asking is like you can as well get double tops, like in this case here, and then you have you can just put in other trading tools, other trading concepts. For example, this was a resistance turning to a support, and this one could have been an entry to the downside. Yeah.
Yeah. Yeah.
Or the other time we covered the market structure, the break of this structure to the downside. If you understood about the wave which you're in and the likely levels that you're looking at, for example, the wave 4 and this type of a trend, then you know what your targets will look like. Okay. So yes, you can use this Eliott wave to bring in other patterns that you want to trade in the market. Okay. And I think with this now we can go to check out on a simple example that you can find on the charts. Yeah. And call it a session. So I think we will need to do more of this so that because this is just an introduction of this Eliott waves concept. I think we need to look deeper into it so that now next we'll be deeper into the charts where we have identified a long-term wave, right? Like the super cycle moving to all those levels that we've looked at.
Exactly, because at the end of the day, it's very extensive. So summarizing it in one session, you need to know what to omit and what to summarize and what to talk in depth, all in a very short time frame. But then again, I think we'll find time to discuss more about this.
Yeah. So you wanted us to look at S&P 500?
Yeah, US 500. It's I think for stock markets, of which that's what it was designed for. I think it's a bit more obvious because you have stock market cycles, so you're able to know to some degree that this super cycle has ended or this one is about to begin.
Sure.
So if you
let's have a look at it
from the beginning of the year, that is.
All right, let's have a look at it.
Right at the top of where the top of this chart is at the end of last year. So you can see it tends to melt really well with a lot of concepts in the Eliott wave.
Yeah, sure. So then this one, if we go to looking at this, into looking at now years, then you're talking about cycle. Okay, so you can check out on this cycle. And maybe something I have to mention is, how do you know now the beginning? Where do you start with the first wave? You begin with the first wave at a point where you see there has been an end of a trend which has been forming for quite some time. And then when there is the end of a long-term trend, there's always a consolidation. Like in this case, in my view, we have a consolidation around this area.
Exactly. Yeah.
Yeah.
And if you zoom out, you can see that this trend started all the way back when COVID, remember? It was a very long-term trend.
Yeah. We might want to look at it that way. Or if we just consider all these beginning of 2020, then we'll be talking about still it's a cycle, right? A very long cycle now. And we have a different view. Like this one will be more of a corrective wave. But in this case, remember, even in a corrective wave, you still have the decrease. So let's work with this for the few years and see what we can find out. So let's say this is the beginning of the first wave. This is going to be 1, 2, 3, 4, 5. Okay.
Yeah.
Yes, it's going to be 1, 2, 3, 4, 5. And then now we're starting the corrective wave.
Yeah. Actually, also something I've just realized when you zoomed out. Just zoom out a bit.
Yep.
Where we had that dip, it was around March. That can be the first. Yeah. So that wave can be the first one, and then the corrective, and then a very long one, third wave, and then corrective, and then final wave.
Sure.
Yeah.
Can as well be like that. So let's begin with this one. So we have, we go to the insert, go to the objects, then we have the wave. So we start with the 1 here, so the lowest point here, right? That is 1. Then we have 2, that's the correction. 3, 4, and then 5. And in this case now, because we're dealing with years, we want to have this one as a cycle. Okay, so these are several years, right? It's within 2020, 2021, 2022. So we can have this one as a cycle. So you right click, go to the properties, and on the parameters, change it to a cycle. If you want to consider it as months to a year, and looking at these ones, for example, you can consider the primary.
That's from January.
Yeah.
The top of which is from January, yeah.
From December, yeah. So the best one will be primary, right? I think it would be best to call it primary, okay? Yeah. So you have primary, and then the labeling will change. This is the appropriate one. Now you have it's these numbers in circles. Okay, so if we zoom a little bit, then we want to study which other smaller cycles are within. Yeah. So for example, in wave 1, then we have other smaller ones. So we're coming from a primary, go to intermediate. So from 1, we need to have like 5 waves in it. I don't know whether we'll find it. We have, is it 1, 2, 3, 4, 5,
exactly.
Right? Making sense, right?
Yeah.
Okay, so you go again and insert, go to the objects, and then so you're going to have it all the way 1, 2, 3, 4, 5. But then we have to change this one into intermediate. So you right click and on the parameters, change it into intermediate. There you have. So the labeling will go on changing depending with the type of wave which you're looking into. And you can always change the colors so that you can differentiate them. Okay. Parameters, instead of red, you can have it in, let's say, is it green? So if you have it in green and increase the size a little bit, then you have something like that. Okay. So we have the intermediate wave within the primary wave, right? And then moving on to this correction now, it's going to be steep. Sometimes you can have the correction being very steep. From 1 to 2, if you zoom in a little bit, you can find there's been a correction around here, but you might want to move even to a lower time frame so that you can see it. We're on daily, we've go to 4 hours and looking at that. Where did we have it? We go back to this part where we had from 1 to 2. So then you can see here we have some kind of from this point here we have A, B, C, right? A, B, C. So you just go there.
Just to take a quick step back and remind our viewers that we are trying to sort of map where we are in the bigger picture. That's why you have major waves and minor waves and waves inside waves. So there's a process to sort of finding out which wave you're currently in before you begin to trend. Is that right, Mathew?
Sure. Yeah, that's the point. So it's always going to start from the bigger picture, the bigger wave. Actually, if someone has got enough time, you need to look at it from the grand super cycle, moving to super cycle, and the cycle to the primary, so that you're able to have a very clear picture. So for us, in this case, we're starting from the cycle, actually from the primary, because we demonstrating how you can work with it, right? And I think, just like I said, we need to create more time and have view an asset right from a very long view, so that we can make it even more clearer. But this is very important, because once you create these cycles, like for instance here, looking at the motive, going back to daily, you realize now at this point where we have 5, we are more into the corrective phase now, right? Where we have, if we go to corrective phase, I insert the objects, and here we'll have on the Eliott wave, select the Eliott corrective wave. So this is going to be A, right? It's going to be B around here, then we have a C somewhere. But then that one will depend with whether we will have a zigzag, right? Whether we have a flat, or which was the other one, a zigzag, a flat, or a triangle.
Okay. Yeah, I think someone is also asking if you can use a zigzag instead of the Eliott wave, if you're using MT4, that is.
Yeah, you can use the zigzag, but now you see the best thing is for the MT5, it helps you to even with the labeling. Okay.
Yes.
If it helps with the labeling, it becomes very
really
easy.
Confusing. It can get really confusing really fast.
Man, I mean, these things about cycle, primary, intermediate, super cycle, it becomes easier if you can get the label straight away from the tool, right? From the MetaTrader. Okay, so I find it easier to use it with the MT5. So in this case, again, I have to go and label it to change it to primary. So properties, wipe the parameters and changes to we're on primary, right? Because we're looking to a month to a year, so primary, and we have it labeled that way. And of course, where I'm placing the B and where I have the C, this is just my speculation. We have to wait and see where the price takes a turn or a strong support for us to know that's where we have the B. So in this case, if we have them forming in this manner, then of course we will conclude that now we are having a zigzag. If, for example, it forms in such a way that this B now is all the way to the same level as the end of the wave 5, and then we have the C maybe closer to A, then we're going to have a setup where we have a flat. Okay, and if it forms in such a way that we're having B a little bit above where we have 5, and then we have C within, and it's forming other ways like they're becoming zigzag, then of course we're having some form of a triangle. Okay, that is where those are the details we're talking about when it comes to the corrective wave, the triangle, the zigzag, and the other one is the flat.
Yeah. So one more thing to remember is when it comes to the waves themselves, the patterns are really trying to explain human behavior. Yeah. Mm-hmm. Where I think the initial impulse is the early adapters, or the guys who come into the trend first. Mm-hmm. And then we have the correction where not everyone is really convinced. And then you have the long-term now mega trend, which is the third wave, or the major wave, which now everyone tries to, it's hyped and stuff like that. And then finally the last wave is when the bag holders, or the people who hear about the trend last try to get in before finally it ends. So the patterns in and by themselves are trying to express human behavior. And it's not that we're trying to just map out patterns in the chart for the sake of mapping out patterns. At the end of the day, they are trying to explain something that is going on with the market. Because at the end of the day, you need to connect patterns to actual human behavior for you to be able to make sense of them or to explain what is happening.
That's for sure. That's for sure.
Yeah.
So another thing that we would want to mention is you see, you want to check out on on this wave 3, wave 5, and wave 1. There sometimes you have an extended wave 3 or an extended wave 5 or even wave 1. So there are different characteristics. Okay, you might have a very extended wave 1 or wave 3 or wave 5. Like in this case, we have an extended wave 3 that we're looking at in this case. Yeah. So then this is just the overview of how you can use the Eliott, right? And someone is asking, can you combine both Eliott waves and trend lines when doing technical analysis? Yes, of course you can. Like what I've just mentioned, you can have a form of, you can check out here on wave 3. Okay, wave 3, it's some form of a channel.
Yeah.
So if I zoom a little bit in and then I go to a lower time frame, like for example 4 hours, it's going to give us a very clear channel, I think. Let me zoom and see whether it's going to come out clearly. Here we are. Look at that. This is a very clear channel to the downside, right? And you can combine with all these other tools that use in trading, it can give you very good entries. Just to repeat myself again, if you can see these waves, then it will become very easier to know the key levels that you're looking at, and there you're expecting the market turns, and you will be trading without a lot of worries on where are we going likely to have the next pivot points. Yeah,
that's cool.
All right, so there's quite a lot we're leaving out. We still not talked about how to incorporate Fibonacci, and you can as well, I think we're going to prepare another session and talk about it more deeply, identifying the super cycle, grand super cycle, and all those levels. Okay, remember this session just takes around 45 minutes. We are actually almost an hour into it, and we could not have incorporated all those aspects into it, but it's something we're going to look
we'll
deeper
need a part
into.
2 or something.
Something like that, yeah. Eliott waves part 2.
More in depth,
yeah,
but
that will be
even so far, what we've learned even is the fact that MT5 is well equipped to even do this for you in terms of marking the points, and other than using zigzags, which sometimes might be confusing, because imagine drawing a major trend, and then in that trying to draw other smaller waves inside the bigger wave, you end up with a lot of lines in your chart.
Yeah, you even have to like know all of them off head, right? Like you have to know which is a super trend, which is the intermediate, which is the primary, which is the minuet, which is the minute or minute, right? So MT5 comes up very strongly, and in this case, by the way, we also have MT5 on the on our platforms. You can use them, right? There are traders who only use the MT4, but now you have MT5. We have got the FX Pesa trader, the web trader. Okay, you can use these tools there and make your trading even better, right? Okay, I don't see whether you have any more questions from the attendees or our viewers. So up to that point, I think we will call it a session. But before that, always follow us on our socials. That's where you will get a lot of announcements, a lot of things which are happening. Like, for example, we have we have the refer friend competition which is happening, and there are goodies coming up for the guys who will win. Yeah, it's in our socials. That's why we communicate all those. Or even come to our classes, meet us physically. We'll tell you about those ones. So follow us on Facebook, Twitter, LinkedIn, Instagram. You get a lot more content about trading and events that we're coming up to support you as our traders. For me, I'm based in Nakuru. You can visit me in Nakuru if you want to speak with me one-on-one about these trading tools. You can speak with Sam from Eldoret. And if you want to engage with me on the social media, I'm on Twitter and Instagram. Find me at Mathew_Kabere. Where can we find you, Sam? Apart from at Eldoret?
Samson Mzera for all socials. I think we usually have interesting, engaging content on Twitter. Yeah. Especially for market updates. So that's one place a trader should have an account.
Exactly. And by the way, we also have Nairobi. So we've only talked about Nakuru and Eldoret. We have Nairobi office. We have office at Kitengela, also at Thika. And Eastleigh.
Yes.
All right. Thank you so much, ladies and gentlemen. Traders, all the best, and learn more about Eliott Waves. Just giving you an overview and a summary. Hoping to have a part 2 in the future. Thank you so much for your time. Have a great evening. Bye.